Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for July 25th, 2018. So yesterday we had a nice push higher, market responding to those big Google earnings, pushing the market up. Now this morning we maybe have a reverse of that emotion coming in. We've had a slew of earnings this morning, and that is now affecting the market poorly. Boeing reported earnings this morning, and you can see they're moving substantially lower here on the morning. General Motors also reported, and they're moving substantially lower this morning. So the result of that is the Dow Jones Industrial Moving Average is moving sharply lower, basically giving up all of the move yesterday after the gap. At least that's where it looks to open this morning. We may open in that gap up from yesterday, giving back a great big portion of yesterday's move. That's the nature of earnings. You know, everything looks great. You go to bed one night, everything's looking good, and the next thing you know, the market has shifted or completely reversed on you. And you know, while the market was looking bullish, you had run in and bought up a bunch of positions, only to come back the next morning and find a great big mess in your trading account with losses. So one of the things that is really important for a trader to do is maintain their discipline, maintain their rules, their guidelines, everything that they do in their trading, and make sure that you're not over trading during earnings season. Planning your risk carefully, because these events are uncontrollable, and it's a bit, well, it's very much like gambling. You have no idea what the possible outcome will be, but you're tossing a great big portion of your money out there on that roulette table, waiting for that marble to fall. And unfortunately, a lot of folks get chopped up in a market like this. We have that fear of missing out. We see these big moves, we want that big money, and that fear of missing out causes us to toss discipline aside, throw our rule book out the window, and do things that we would normally not do because we get caught up in the drama and the emotion of earnings. Now, keep in mind, we have between right now and Friday about 600 companies that are going to report earnings. So this isn't going to change anytime soon. We're going to see these big potential moves and a lot of seesawing back and forth as the market reacts to these numbers. So make sure you've planned your risk carefully, and know exactly what you're going to do if the market makes a quick shift, changing directions. And it can happen intraday as well. So taking a look here at the diamonds, we are still holding above support. That's a good thing. We're holding above support. We do have a current trend to the upside, and we are holding below this resistance. So we're kind of trapped in a range. And as long as we stay above about 250 here in the diamonds, 25,000 on the Dow, we should be okay. That doesn't mean you won't have your account chopped up as we bounce around here. Let's take a look at the SPY real quick. SPY had a tougher day yesterday, rallied up, but then just saw some sellers come in that just kind of lost a little steam, lost a little momentum as the day went on yesterday. And we experienced several whipsaws throughout the day. If I go to a short-term chart, 15-minute chart, you can see there's that gap up, and then we whip down and whip back up, and then boink back down and then back up again. So we kind of whipped around yesterday, experiencing those intraday swings that were pretty substantial and making for a little bit of concern and caution. But here's what we want to look at in the chart without bringing any emotion or idea of direction to this chart. What we want to recognize is that we are holding above resistance. We are holding above current trend. We are still below those price highs. So here again, if we pull back, there's nothing wrong with a pullback in here. As long as we hold these support levels, we still have an opportunity to move higher. So looking at that chart objectively, we're still in a pretty good place here, at least for now. This morning, you can see we're going to give up a bunch of that move yesterday in the morning gap. Let's take a look at the Qs. Qs yesterday had a real tough time. They just couldn't seem to gain any traction. We popped out to new record highs, but then the whole rest of the day just seemed to run into some profit takers, some selling going on. But here's what we need to look at in this chart. We are holding above support levels. We have a support level here. We have a nice support level here. We're also holding above this trend. So far we're doing okay. We just need that to hang on, and you can see we're getting just a little bit of a push down here this morning. Not as dramatic as in the Dow, but a little bit of push down. Now remember, we have Facebook earnings coming after the bell today. Facebook just continues to rise toward earnings as if everyone just believes this is going to have a blowout earnings. Let's hope they're right, because if we disappoint here on Facebook, that could certainly affect the NASDAQ substantially and really mess with the psychology of the market and put some fear and doubt into them if they happen to miss or fail on earnings. So kind of keep that in mind. If we look at IWM really got bearish yesterday all of a sudden. It just didn't like what it was seeing, I guess. Ran up here close to these highs. You can see we came really, really close to testing that record high up here, but backed away from it substantially, dropping all the way down, bearish engulfing candle. The good news is that it by the end of the day, it ended up holding on to this little price support right here. But this candle right here would suggest a lower low today is possible. Right now, we're not seeing that. You can see we're holding it right in here for the open, so we're holding right at that support. That's what we want to see. Otherwise, we could expect IWM to maybe slip and come back, testing a level of support down in here, which obviously could spook the market just a little bit. Let's take a look at the VIX. The VIX yesterday bounced around quite a bit. We moved up and moved down as the market went through those intraday swings, kind of finishing the day just middle of the range, showing a little bit of chop right around this price support level. Now today, with selling coming in here in the morning, we're likely to see that VIX pop up a little fear come in here. So let's watch that closely for that potential. We don't want fear to get out of control, and that could quickly happen, as you can see, as we did here in late January, early February. Fear kind of just ran rampant there for a little bit. That's not something we want to see. We don't want to see it growing beyond reason. So let's kind of keep an eye on it. Make sure it stays in check. Let's take a look at T21.22. T21.22, the 4-week new high, new low ratio. And you can see that pulled back yesterday. Even though the market, the Dow went up, we struggled on the SPY, we struggled on the Qs, we struggled in IWM. So that pulled this back. You can see we're now below the 50 range here, meaning that we have plenty of upside potential. Unfortunately, we still have plenty of downside potential here as well. So we're kind of stuck here in that middle range where anything is possible as these earnings continue to roll out at a real fast pace. And that could certainly change the market direction at any time. So we'll have to keep a real close focus to the price action, try to remain flexible in our trading, and please remember, plan your risk carefully. Don't overtrade earnings season. Let's take a quick look here at the economic calendar. Our economic calendar this morning, we have a couple big reports on here that could move the market around a little bit. The biggest one being the new home sales. Now, it's expected that the new home sales numbers will decline today. Now, that could add a little pressure to the market, downside pressure to the market, if that number comes in larger than expected. So keep an eye on that news around 10 o'clock. And then the petroleum status report at 10:30 can always move the market around if there is a surprise build in supplies. That'll put pressure on oil prices and oil stocks. If there is a surprise decline in supplies, that will elevate those oil stocks and oil prices. So watch those two closely. Other than that, we had the mortgage applications this morning, and we have a couple bond auctions, which wouldn't be expected to move the market at all. Beyond that, on our earnings calendar, we had over 230 companies on the earnings calendar today reporting earnings, and a lot of those have already started to roll out, and we're seeing the effects of that in the current market. And remember, we have more than 100 companies reporting after the close today. So lots of news coming out over the course of the day, and lots of data that could move this market around. So we're going to have to remain flexible. We're going to have to stay really focused on price action for our clues. And if you do trade, make sure you have the willingness to hold through some whippy price action, those big swings intraday as the market reacts to some of this news. If you're unwilling to do that, it may be better to just stand on the side and watch this drama play out from the sidelines. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, please remember, I'm not trying to give you direction or anything about what the market will do. It's just an objective look of what the charts are saying right now. So if you've never seen these before, please click on the subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons, drop a comment. I really do appreciate that a ton. And if you guys want to, feel free to share this video with any friends and family that you might think could benefit from this information. Everyone, take care. Have an awesome, awesome day. I wish you great success. We'll talk to you all bright and early Thursday morning. Take care, everyone.